Do not put all your eggs in one basket. Remember this wise saying? I know it sounds terribly hackneyed, but the recent stock market meltdown is an important reminder for everyone not to park all our investments in one asset class. Instead, we need to get back to the basics of sound investing, that of diversifying our savings portfolio between equity, debt and real estate. Now today on the Property Show, we get to some simple answers to the question, how do you invest sensibly in real estate and maximize your returns? Joining me on the show, Surabhi Marwah, partner EY India. Also with us, Rahul Jain, President Personal Wealth, Edelweiss Wealth Management, and Ashwin Chadha, President India Sotheby's International Realty. Thank you everyone for joining me. I think the first question is going to be to the man in real estate. Ashwin, with inflation now at 8% plus and home loan interest rates starting to inch up, does it really make sense to buy more real estate or less?
Good evening, Manisha. Thank you for having me on your show. So yes, real estate per se is an asset class which is a hedge against inflation, just like any other commodity. As the inflation rises, the real estate prices also rise, and hence your portfolio rises. Unlike a lot of financial assets which do not have a very defined correlation with the inflation. So to my mind, it makes sense. We are recommending our clients to buy land as an asset class, be it in the form of standalone bungalows or for that matter farmhouses, followed by of course condominiums, and the reason for that is we see an opportunity to counter this inflation. Just to take you back, Manisha, over the last 10 years, real estate markets have been quite stagnant. Interest rates have actually, mortgage rates, have come down from a high of 9.9% to the current 6.8%. So much so the gap between the mortgage rate and the rental yield has come off from a high of 6.9%, 6.8% to about 3.3%. To my mind, all these things really bode well for an investment in real estate. If you look at some of the recent numbers, Q1 of 2022, the top 7 cities of India recorded a sale of 99,500 units in residential real estate, highest ever since 2015. And if you were to, look at it in perspective, this was a 70% rise over Q1 of 2021. And guess which city scored the highest? Delhi NCR, 114% whopping rise over 2021 numbers.
So Ashwin, you made a very strong case for the geography that you're strongest in, but let me ask someone who's doing a lot of wealth advising to his client, Rahul. Ashwin spoke about mortgage rates. Yes, they are at a decade low, and even if they start inching up, they're unlikely to go beyond 7.5% this year. Would you agree that this is probably a good time to catch something like real estate, and if you don't have one in your portfolio, then include one?
So first of all, good evening, Manisha, for inviting me to the show. So I think as what Ashwin said, and I think that trend is everyone seeing in the market, where you're seeing land prices, residential prices, all are going up. If one does not have a real estate in his portfolio, I think for surely I will take one for consumption purposes. And also, if as an investor, I like real estate as an asset class, and I think there is a capital appreciation, for sure I will also buy the same. But at least when I look at portfolios, I want to keep my portfolio and investment thesis very simple. And for me, it is always for consumption or capital appreciation, but making it a hedge against inflation makes it very complicated for clients to understand. So,
so Rahul, would you play it for capital appreciation at this point of time? Because, it is a cyclical asset class. So my question is this a good time to catch it for capital appreciation?
Yeah, why not? I think it's a good time to add for capital appreciation for sure.
Okay. Surabhi, your views on real estate, both as an investment hedge and if you're at a start of a cycle, which is generally multi-year, would you think that this is a good time to invest?
I think I would agree, and thank you very much. It's great to be in this August company. With Ashwin and I absolutely agree with what they're saying. The little twist to the story also is that the government seems to want to encourage multiple properties also, because about a year or two back they had this concept of deemed to be let out. So earlier, you could have one house, and if you had another one, the other one was you had to pay a deemed rental. Now it's become two such houses, and you pay a deemed rental only on the third part. So from that perspective also, they've laid out the commercial part. I'm just laying out that even from a tax perspective, it makes absolute sense to have this hedging in your portfolio.
Okay, so let me come to the other very important question. Now, a lot of consumers and owners call me up and say, we are sitting on a portfolio, or NCR specifically, and also Mumbai, a lot of high net worth investors and even salaried class are sitting on multiple residential properties bought in the heydays of 2012 and around that time. Now, with prices haven't gone anywhere, they're holding on to these assets, waiting for prices to rise. Ashwin, what's your recommendation? Sell now or wait to get better pricing? If you believe that we are at a start of a bull run of sorts, and how long do you think that will continue?
Okay, so my two bits on the bull run per se. I think we've just about got started. Typically, the bull bear run in real estate in India lasts for about 12-13 years. We usually see about 3 to 5 years of bull run, followed by a time correction and a price correction. The leading indicator to make us believe that there is a bull run up in the coming is the volumes. Whether you slice and dice markets bottom up from a micro market to a city perspective, or top down from a country or a global perspective, it's only showing one trend. Volumes are up by 30 to 40% across the board. Coming to the fact that investors have got multiple flats in their apartments as part of their portfolio, I would definitely advise them to sell and realign to achieve one or more of, say, the following objectives. One being to sell and to invest and enhance their primary home from a living standard perspective. I think that's very critical. And that's something that COVID has taught us. After one's family, the only thing that's come to our rescue is one's own personal home. Second, I would feel that you should look to realign to invest in a holiday home. This could help you achieve a dual objective of end use as well as getting a rental income of about, say, 3 to 5-6%. And last but not the least, I would suggest to realign by coming out of tier 2, tier 3 cities or C, D grade developers and get into tier 1 cities, completed projects, and the A grade developers. That will hold your portfolio in good stead for the longer term.
Ashwin, you mentioned that a holiday home rental yields could be up 5 to 6%. How's that? I mean, most residential real estate in India continues to give you 2 to 3, and if you're very, very lucky, then maybe 3.5%.
Yes, so Manisha, I mentioned 3 to 6, but yes, holiday homes are commanding a slightly higher rental yield, thanks to the fact that they've caught on in this COVID era. People are, whether it is ultra high net worths who have disposable income and are looking to invest in holiday homes, irrespective of which life stage or life cycle stage they are at, or for that matter, professionals or high net worths or mass affluent individuals who are looking at this from a dual perspective of not just looking at it for end use, but also getting that rental yield. And we also have, in this era, we've got a plethora of operators who are today helping you not just maintain the property, but also rent it out and give you that yield.
Okay. Fair enough. So aggregators and Airbnb is a case in point of how at least your property is not lying vacant and unused when you're not there. Rahul, would you agree with that? That consolidate right now, move from tier 2, 3 cities and maybe unknown developers to better locations, bigger cities?
So I would look at it from different lenses. Whenever it comes from consolidation point of view, since you have seen some hike in price in real estate market, there are two ways to look at it. One is that if you bought something during lull period for capital appreciation, it's a good time to book some profits for sure. That is one. Another part is also, I meet a lot of clients, a lot of consumers, investors who have completely a real estate portfolio, especially people in Delhi, NCR and all. As a wealth management perspective, I will say do asset allocation. Don't be only focused on real estate, do some other assets as well. So it's a good time of diversification, moving from one asset to other asset classes. And obviously, if you have multiple flats which you have bought during a lull period, why not do some profit booking? Because money booked or profit booked is always advisable.
Okay. Let's move to another very interesting asset class. Surabhi, people use REITs as one of the asset classes within real estate to earn passive income, and commercial real estate in fact has a very strong story in India. What's your view on it?
I think it's a very hot topic at the moment. They're excellent. They offer stable, they're stable yielding products. They give grade A asset returns, and we have Rahul and others who know more about grade A asset returns and others. I think why REITs have also become popular is because of the whole hedging part of it. Also, when the entire budget came out, there was a lot of talk about making sure that dividends that you're getting from REITs are tax exempt if certain other corporate tax measures are met. So from that perspective, they're doing well. They are grade A asset returns. There's a bit of a tax efficiency that you get on dividends that you're not getting on other financial instruments as well. So I have seen, like Ashwin and Rahul said, I've seen a lot of HNIs and others put money in REITs more from a diversification and also from a tax perspective as well. And on that point also, Manisha, on the other point that you had, the one earlier, and Rahul, you talked about profit booking. I also wanted to say, the tax rates for long-term capital gains have gone down after the surcharge has been crystallized. So perfect time from that perspective also. Nothing can be done commercially without the tax part of it. And while I talk a little bit more around tax, but it's a good time even from that perspective. Back to you.
Okay. Rahul, your view on just REITs per se, are you advising it to your clients for passive income or regular income, however you might term it?
I think REIT is a great product from the real estate point of play. I'll tell you there are 3-4 very great things about REIT. One is that it is very convenient. If you want to buy a commercial real estate for HNIs who have a sizable portfolio, is still manageable, but for salaried and all, it might be difficult. So it's very convenient. I think the yields on REIT, if you look at last 2 years, has been between 12 to 15%. Analyze, which is a very good yields on REIT. Third, I think REITs provide you a lot of credible names. I think what Ashwin was speaking about, tier 1, tier 2 developers, getting good developers, I think REIT provides you that. They have credible names. And effectively, it gives you a stable income, consistent income. And in that sense, REITs becomes a very, very good play, especially if you want to play real estate, play in Indian markets. I think REIT becomes it's a good alternative, good solution for investors and consumers.
Okay. Ashwin, a lot of people also believe that REITs are not always the safest. I mean, one shouldn't take them as a completely debt sort of a product which will not fluctuate. It does have some fluctuations in the market price, as we've seen, but you do get rental yield. Where will you place it, and what's your view? Quickly, if you can tell us that.
So in our experience, REITs have found more favor with professionals, with high net worths and the mass affluent category. With the ultra high net worth category, they do prefer to buy physical real estate because they like to have that decision making element in their hand, the ability to decide on which micro market, what tenant, how to finance their transaction and all of that.
Okay, but that's a wealthy people's game. But for most other people, I guess it's REITs. Thank you,
It makes
Surabhi,
sense.
Ashwin and Rahul for joining me and giving us that clarity. Looks like, yes, we are at the start of some sort of a bull cycle in residential real estate. If you look at January to April 2019, and let's bring up that chart, 1,21,800 units were sold. This is pre-pandemic. And now if you look at it, which is January to April 2022, 1,59,900 units have been sold, which is up 31%. So we are way above the pre-pandemic level. So great time to look at your real estate portfolio and take some right decisions by rejigging. When we come back, what makes London an attractive destination for wealthy Indians? Stay with us.